Welcome to the Bullion Signal Podcast, the channel where we look past the headlines to understand the powerful macroeconomic forces that are shaping our world, and more importantly, our wealth. I'm your host, and today we're diving into a story that connects the most futuristic technology on the planet with one of its most ancient metals. We're talking about the explosion of artificial intelligence. The world is getting ready to spend not just billions, but hundreds of billions of dollars to build out the infrastructure for AI. But there's a secret, a physical component that nobody is really talking about. It's not just about silicon chips and complex algorithms. It's about a precious metal that's been foundational to industry and wealth for thousands of years. We're talking about silver. So that brings us to the central question, the one we're going to unpack today. What on earth is the connection between AI, this digital, almost ethereal concept, and a lump of physical ancient metal like silver? You know, the answer to this question reveals a massive, and I mean massive, shift that's happening in the global economy. It's a collision of unstoppable demand from a brand new industry with a supply chain that is already stretched to its breaking point. Understanding this link is going to be crucial for anyone looking to protect their assets in the coming years. So, stick with me. All right, let's start with the money because the numbers here are just staggering. A group called the Global AI Infrastructure Investment Partnership is targeting an initial fund of $100 billion. Now let's just pause on that number. $100 billion. That's not for software, not for research, that's just for the physical build-out. The data centers, the servers, the hardware. The sheer scale of capital being deployed here is a signal in itself. And if you thought that was big, well, it gets bigger. A separate project with the codename Stargate is aiming for $500 billion, $500 billion, all for the exact same purpose, building the physical factories that AI needs to run. When you add these up, you realize we're not talking about a few new buildings. This is one of the largest, most coordinated industrial construction projects in the history of mankind. It's on the scale of the interstate highway system or the global rollout of the internet itself. And you have to look at who is behind this push. These aren't speculative startups hoping for a lucky break. These are the absolute titans of global finance and technology. We're talking about BlackRock, the world's largest asset manager, Microsoft and OpenAI, the leaders in the AI race, SoftBank, NVIDIA, Oracle. These are the companies that form the very bedrock of our modern economy. When this much money and this much corporate power all move in the same direction, you have to pay attention. This isn't just a trend. It's a fundamental reshaping of our industrial landscape. So that brings us to the core of the issue, the hidden engine behind this $500 billion revolution. Why do these massive, power-hungry AI data centers physically, fundamentally depend on silver? It's not an accident, and it's not a preference. It's a requirement baked in by the laws of physics. Let's break down the science because it's actually pretty straightforward. It all comes down to a single word, conductivity. It's a simple concept. It's just a measure of how well a material can move electricity or heat from one point to another. And here's the key fact. Of all the metals on Earth, silver is the undisputed champion. It has the highest electrical conductivity and the highest thermal conductivity. Nothing else even comes close. In a normal electronic device, maybe you can get away with using copper, which is a close second. But in these hyper-intensive, high-performance AI systems, where every single watt of power and every degree of heat matters, efficiency isn't a luxury. It becomes an absolute necessity. And what's really important to understand is that silver's role isn't just in one little component. It is woven into the very fabric of these data centers. It's in the high-voltage switchgear that brings massive amounts of power into the building. It's in the printed circuit boards of every single server, in the conductive traces and capacitors. It's crucial for thermal management, helping to pull the immense heat away from those powerful AI chips. And it's in the high-speed connectors that allow data to move at the speed of light. Silver is everywhere in this ecosystem. Now, to really grasp the scale of this, think about this quote. A single one of these AI data centers can use as much electricity as a small city. Imagine the entire power grid of a city being funneled into one building. When you're managing that level of energy, even a tiny improvement in efficiency from using silver instead of another metal translates into millions of dollars of savings in electricity costs over the life of the facility. More importantly, it means more reliable performance and less heat-related failure. They have to use it. Okay, so let's recap where we are. We have an explosion in demand for silver from a brand new, incredibly wealthy, and non-negotiable consumer, the AI industry. So what happens when that tidal wave of new demand crashes into a supply chain that is already struggling to keep up? Well, you get what we're seeing right now, a severely and perhaps permanently unbalanced market. This chart really lays out the problem in black and white. In 2024, the world is projected to demand over 1.16 billion ounces of silver. That's for everything: industry, investment, jewelry, the whole lot. But look at the supply side. Total supply, and that includes every ounce from every mine, plus all the recycling, is only about 1 billion ounces. That's a shortfall of over 160 million ounces. That is a massive deficit. And the scary part is, this isn't a one-off event. In fact, the silver market has been in a structural deficit for 5 years running. Let that sink in. For half a decade, we have been consuming more silver than the planet produces. We've been drawing down on above-ground stockpiles to fill the gap. And now, the new AI demand is like pouring gasoline on an already raging fire. Those stockpiles are dwindling, and the deficit is getting wider every year. The logical question, then, is why don't miners just dig up more silver? If the price goes up, shouldn't supply follow? Well, with silver, it's not that simple. The supply is what economists call inelastic, meaning it can't respond quickly to price changes. And there are 3 main reasons for this. First, most silver, about 70 to 80% of it, isn't mined on its own. It's a byproduct of mining for other industrial metals, like lead, zinc, and copper. So silver production is really tied to the demand for those metals, not its own price. Second, even if you wanted to open a new, dedicated silver mine, it's a monumental task. It takes, on average, 5 to 10 years to go from discovery to actual production. You can't just flip a switch. And third, while we do recycle, think about the tiny amounts of silver in every smartphone or laptop. Recovering that is incredibly difficult and expensive. It's not a significant source of new supply. And if that wasn't enough, there's a huge geopolitical shift making things even tighter. China, for years, was a net supplier of silver to the rest of the world. But that has completely flipped. Their own internal industrial demand, especially for solar panels and electronics, has surged so dramatically that China is now a major net importer of silver. They are now competing with the rest of the world for those already scarce ounces, pulling even more metal off the global market. So what happens when you combine years of structural deficits, a supply that can't respond, a geopolitical squeeze, and then you inject hundreds of billions of dollars of new, unstoppable demand? The market doesn't just bend. Eventually, it has to break. And many analysts are now predicting that in 2025, this physical market squeeze is finally going to translate into a financial market supernova. The price could be set for a historic breakout. Let's walk through what some of these projections look like. And remember, these are just projections, but they're based on the fundamentals we've just discussed. The models show that around early October 2025, silver could finally break its 45-year-old all-time high set back in 1980. But that's just the beginning. Once that psychological barrier is broken, the move could accelerate. By late November, you could see prices hitting over $57 an ounce. Then, into December, it could blow past 60, then 65, potentially setting a new all-time record of nearly $67 per ounce. That's a truly explosive, life-changing kind of move in a very short period of time. When you add it all up, the projected increase for the year would be staggering, a price rise of over 120%. This wouldn't just be a good year for silver, it would be by far its best annual performance in modern history. The pressure that has been building up in the physical market for years could finally be released in the financial markets in a spectacular fashion. But a dramatic price move like that isn't really the end of the story. In fact, it's just the beginning of what is a new reality for the silver market, and for all of us. We are now being forced to confront the very real physical costs of building our increasingly digital future. Technology doesn't just come from the ether. It's built from materials dug out of the ground. And this is maybe the single most important point to understand. For decades, a lot of silver demand was for investment: coins, bars, ETFs. That silver sits in a vault, and if the price is right, it can be sold and come right back into the market. But AI demand is completely different. This is industrial consumption. Once an ounce of silver is soldered onto a server motherboard, it is locked into that piece of hardware for its entire lifespan, maybe 7 to 10 years. It is effectively gone. It is not coming back to the market. This is one-way demand that permanently removes supply from the system. Don't just take my word for it. Michael Steinman, the CEO of Pan American Silver, one of the world's largest silver producers, said it perfectly. The structural deficit we are living in isn't a temporary problem. It isn't a blip that's going to correct itself next year. With the dual demand drivers of AI and the green energy transition, both of which are silver intensive, this deficit is the new normal. So, what are the key takeaways from all of this? What should you remember? First, this AI story is not a short-term trade. This is a multi-decade infrastructure project that will demand more and more silver every single year. Second, this revolution has quietly transformed the world's biggest tech companies into the world's biggest silver consumers. Their demand is now a driving force in the market. Third, supply is physically and structurally constrained. It simply cannot ramp up quickly to meet this new demand. And finally, the most fundamental truth: our entire advanced technological society runs on physical materials. It runs on silver, and the bill for that silver is finally coming due. And that leaves us with a final and, frankly, a somewhat unsettling question to think about. This AI build-out is going to continue for decades, consuming incredible amounts of physical resources along the way. So, what happens to the price of progress? What happens to our digital future when its most critical physical foundation, when silver, becomes not just expensive but genuinely scarce? That's a question that will define the next decade. Thank you for tuning into the Bullion Signal Podcast. If you found this analysis valuable, please make sure you subscribe to the channel and share this with someone who needs to hear it. Your support helps us continue to bring you these critical insights. And as always, a quick reminder: this content is for informational and educational purposes only. It is not financial or investment advice. You should always conduct your own research and consult with a professional before making any financial decisions. You are solely responsible for the choices you make. We'll see you in the next episode.